There is no such thing as the best stock to buy in, it must be made very clear. Depending on personal preferences, stocks for novices and experts will differ. Even the best stocks to buy right now may not perform as many expect. Even the best 10 stocks to purchase right now can be humbled by market turbulence. However, the stock market is experiencing an exciting period right now. Nevertheless, certain stocks have done a better job of navigating the market than the majority of their rivals. There is no perfect stock, to reiterate. Well, here are the top 10 stocks to buy right now, though. Before starting, don't forget to like and subscribe to our channel for more future updates, so let's start. Number 10. Apple Incorporated. Currently the biggest corporation in the world, Apple Incorporated has a market valuation of $2.3 trillion. Apple hasn't escaped the larger market sell-offs, despite its status as a global leader in numerous areas. Over the course of 2022, there has been indiscriminate selling, and not even Apple may turn out to be an exception. Apple has had a year-to-date decline of around 28% due to rising inflation and concerns about an impending recession. Having said that, the company's actions or inactions are not the reason why shares are declining. Rather, it is the gloomy mood on Wall Street as a whole. To begin with, Apple has performed better than the majority of other tech firms in the industry. 80% of overall revenue came from the company's product category, which includes the iPhone, Mac, iPad, wearables, and various accessories. Sales in this area increased year over year. Sales of Apple's service businesses, which include the App Store, Apple Music, Apple TV Plus, iCloud, and other subscription services, rose 17.3% year over year to close to $20 billion. There is no question in my mind. Number 9. Alphabet Incorporated. Alphabet is not just one of the finest stocks to buy right now, but it is easily the best stock to buy in the current market. There is no universal method to objectively rank a single business at the top of every investor's wish list, because different investing strategies desire different types of assets. But Alphabet should be mentioned in practically every conversation. Even more crucially, the company should be able to grow whether or not there is a recession on the horizon thanks to its competitive valuation and strong balance sheet. A recession may not worry Alphabet, but it seems that its investors are. After example, when interest rates rise, tech equities typically see a decline, because increasing borrowing rates would indiscriminately reduce the future earnings of underperforming companies. The tech-heavy Nasdaq has fallen approximately 38% year-to-date. Sadly, despite having a balance sheet that was as close to faultless as conceivable, Alphabet was able to avoid the selling. As a result, Alphabet has decreased by around 27% so far this year. However, the company's reign at the top seems to be just beginning. Alphabet boasts a 30% operating margin, which is more than enough to satisfy investors, in addition to revenue growth of 23% year over year as the most recent quarter. Number 8. Qualcomm Incorporated. Qualcomm is a worldwide company with its headquarters in San Diego that focuses on creating chips, software, and services for wireless technology. Qualcomm's achievements, as a pioneer in wireless technology, are essential to the adoption of the 5G, 4G, CDMA 2000, TD-SCDMA, and WCDMA mobile communication standards. The entire IT sector has suffered as a result of the imminent recession threat and rising interest rates. The management largely praised the quarter in the most recent results release. Revenue exceeded forecasts, rising 37% over the prior year to $10.93 billion. To $2.96 per fully diluted share, adjusted earnings per share climbed 54% year over year. In the end, Qualcomm actually surpassed all predictions made by analysts. Number 7. Shopify Incorporated. Shopify is a multinational Canadian e-commerce business that focuses on bringing together businesses and customers on a worldwide level. But most importantly, Shopify gives companies of all sizes the resources they require to prosper in a digital market that is always expanding. The Shopify platform may give businesses the tools they need to run an online store, take payments, promote their products and services, send orders, and more. Unsurprisingly, Shopify prospered as lockdowns continued and more people started shopping online. In fact, the e-commerce platform's shares rose from $416 when the epidemic was designated a worldwide emergency to $1,762 in the fourth quarter of last year, which was a record high. Investors questioned the stock's potential upside as revenue grew at an astonishing rate. Shopify's revenue increased by 86% and 57% during the previous 2 years, respectively. The pandemic's trends of staying at home clearly benefited Shopify. Number 6. Advanced Micro Devices, Incorporated. The name Advanced Micro Devices has come to be associated with some of the best semiconductors, microprocessors, and GPUs available today. The goods of the semiconductor company are already extremely significant to numerous global industries. It is becoming increasingly clear that AMD will act as a catalyst for the development of technology in the future. Herein lays the reason AMD appears to be among the finest companies to purchase and keep in 2022. The well-established tech industry will unquestionably profit from upcoming technological changes. The company's present performance in relation to its valuation is the first argument that AMD should be considered as one of the finest companies to purchase right now. AMD just reported $5.9 billion in revenue, an increase of 71% year-over-year and 22% from the prior quarter. Gross margins grew 48% year-over-year as a result of stronger server processor revenue. Number 5. SoFi Technologies, Incorporated. After coming public less than 2 years ago, SoFi Technologies, sometimes known as SoFi for short, is making an effort to establish itself as one of the top stocks to purchase. For those who are unfamiliar, SoFi is a fintech startup that operates online and aims to upend the multi-trillion-dollar banking sector. The new banking platform promises that by doing this, it will assist its users in getting their money straight. SoFi's services are intended to specifically use devoted customers' capital and assist them in achieving financial independence, as suggested by the company's tagline. However, SoFi enables its users to practically take every step required to achieve financial freedom, all in one place instead of only operating as an outmoded banking with excessive fees. SoFi delivered investors with yet another impressive quarter. But since going public at the start of last year, shares have fallen by more than half. Shares are still trading at what seems to be a discount, after increasing by 23.8% on the most recent results announcement. Number 4. Mercado Libre, Incorporated. An Argentinian business with U.S. legal status called Mercado Libre runs an internet platform for e-commerce, financial technology, and a variety of other services. Although the company's operations are based mostly in Argentina, it provides services to at least 16 Latin American nations and is thought to hold roughly 30% of the market share for e-commerce in each of its various regions. Because there isn't a better parallel, Mercado Libre is the Amazon of Latin America and it is still expanding quickly. Even just maintaining its present market share would benefit from the e-commerce industry's expansion, which would be a considerable tailwind. By the end of the first quarter, Mercado Libre had 81 million active users, a 15.7% increase year-over-year. The number of active users on Mercado Libre should rise in line with the digitization of e-commerce. In a region with a lot of unrealized potential, Mercado Libre is one of the major e-commerce players. Mercado Libre will clearly benefit as more people switch to online shopping. Number 3. Sea Limited. Sea Limited is expanding quickly and becoming a major force in Southeast Asia. The company runs the sizable Garena digital gaming platform, but its Shopee e-commerce platform and SeaMoney digital payments network, both of which have been expanding quickly, are the most promising growth drivers. Shopee's revenue increased 64% year-over-year in the first quarter of 2022. While SeaMoney, the newest division of the company, experienced a startling 360% growth. With Garena, Shopee, and SeaMoney, Sea Limited has 3 businesses that are rapidly expanding and have great potential. It is swiftly rising to the top in all 3, both in its own area and in other important global areas. I think it's one of the better long-term stock purchases for exposure to other countries, despite the fact that its 2 most intriguing enterprises are still in their early phases. Number 2. Amazon. For the majority of individuals, Amazon doesn't actually require much of an elevator pitch. With around $600 billion in gross goods sales annually, the firm dominates the U.S. e-commerce market, and its Amazon Web Services cloud platform is a market leader. But there is more room for growth than you might imagine. E-commerce adoption is still far from being at its highest point. Less than 15% of all retail sales in the United States are made online. The cloud sector is also a very new one. Amazon also has a huge amount of potential in other sectors, including healthcare, supermarkets, local markets, and more. Number 1. Metaverse. The term metaverse conjures up a virtual setting in which avatars travel by virtual vehicle and acquire artwork for their fictional residences using non-fungible token NFTs. Although such virtual trade may eventually be significant, the metaverse early uses are more practical. According to Novak, we anticipate the metaverse to serve largely as an e-commerce, an advertising platform for offline goods and purchases. In fact, the $8.3 trillion opportunity to monetize U.S. consumer spending on everything, from games and music to fashion, vehicles, and real estate is represented by advertising and e-commerce. Consumer spending on new, more immersive experiences might increase by $5 trillion in the not-too-distant future. When consumers in the metaverse can test drive new cars, attend live concerts anywhere in the world, and walk through home renovation plans. Metaverse games, metaverse NFTs, metaverse crypto, metaverse real estate, and metaverse stocks are the 5 strategies for effectively investing in the metaverse, each of which offers special advantages to investors. What do you think of our video? Which stock do you like most? Let us know in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.